Hey, it's Mike Langford. Welcome to the So Fine podcast, part of the FinServe Marketing Podcast Network. You are going to love this week's show because my guest and his team have created something that really epitomizes what I love about our space so much. You know, just when you think there are no more innovative things to do in the area of payments, for example, as this podcast will spend a lot of time in that space, a group of entrepreneurs goes, hey, you know what? The credit card processing industry, it's like a huge drain on businesses. Maybe we can shake stuff up a little bit and save businesses a crap ton of money while giving everyone involved a better experience. And then they go and do it. That's literally the type of stuff that I live for when it comes to our space, because I've been in the financial services industry now for, I'm going to sound wicked old, 26 years. And I've seen a lot of innovative stuff. And sometimes you just look at certain businesses and you go, yeah, that's the way it is. It's just cost of doing business. And then somebody innovates on it and it's really, really cool. So anyway, I think this is going to be one of the startups that you learn about in which you go, oh, seems so obvious now. 5 years from now, you'll look back on this podcast. You'll learn what Eric Smith and the team at AppBrilliance, my guest today, are working on. And you'll be like, oh, I mean, just kind of like when Stripe came about, right? If you remember the world before Stripe, it was a pain in the ass and really expensive to put credit card processing on your website. And Stripe comes along, makes it super duper easy that anybody with even rudimentary programming skills for web dev can do it. And then if you're setting up a website and using a website builder, like Squarespace as an example, even crazy easier, if you will, to set up Stripe. So the innovations just keep coming. And this is one of the ones where I'm very passionate about what Eric and his team are doing. But before we dive into my conversation with Eric, make sure you check out some of the other podcasts on the network. First of all, give the Modern Financial Advisor podcast by Trulytics a listen. On last week's show, we had a gentleman by the name of Owen Dahl on the podcast. And Owen runs a consulting company that is all about business valuation and business transactions and so forth. And he has a tremendous amount of history in that space. And he shared some really interesting insights on how the pandemic and the likely economic fallout from it is likely to affect the valuation and the M&A activity for RIAs and financial advisory firms. So if you know people in that space, you're going to want to check that out and share that podcast with them. Speaking of economics, the Advisor Financing Forum by Skyview Partners is live on the network. I mentioned that last week, and voila, it is live. I got to spend some time with their chief economist, John Morant, and get his take on whether we should be scared about the massive run-up in the national debt that's kind of happening as a response to the COVID-19 pandemic. And kind of a little, preview, don't be all that afraid, right? At least according to John. So really, really interesting stuff. Check that out. Sounds nerdy, but trust me on this one, way more fun than you can imagine. John is very engaging, puts things in really easy to understand language. I enjoyed our conversation. I'm looking forward to having John on the show a lot more. So do check that out. Just swing by finservemarketing.com/podcast to see all the shows. We're going to be adding more in the coming weeks, so I'm really excited about that. And you could also, as you might imagine, find all the podcasts on Apple, Spotify, Google Podcasts, Stitcher, wherever you like to get your podcast jam on. Okay, now let's get to it with Eric. So as a way of previewing our conversation, a few years ago at the SoFine at South by Southwest event, in one of my little mini TED Talk presentations, I shared the notion that the smartphone is the biggest force for disruption in the financial services world, because it allows consumers to unbundle their financial products from their big bank or their big brokerage firm. The moat that large firms had was they have scale in infrastructure, right? They had lots of buildings, they had lots of branches, lots of ATMs, thousands of phone reps, and all that kind of stuff. And in the old days, when you needed tens of millions of dollars just to build a website, they had that advantage too. But things have been dramatically democratized, right? Lots of APIs are available now, and we're going to be talking about an SDK in this episode, have made it easy for new upstart fintech players to come in and build something. But the next piece of that is the smartphone has allowed for ease of scale of distribution that has nothing to do with physical location. You don't need to go to a branch to open up an account with some of the new banking products, right? You don't need to even go to a website to open up an account with Robinhood. You just pull up your phone, go to the App Store, download the Robinhood app, and boom, you've got an account. And it's funded and active really quickly. So the smartphone has been incredibly disruptive. But just as importantly, the adoption of the smartphone and the change in consumer preferences and expectations for service has radically shifted the landscape as well. And so Eric and his team at AppBrilliance saw that, and they set their eyes on disrupting the $120 billion credit card processing space. And that's just the fees, by the way. That's just not the transactions. That's the $120 billion in credit card fees every year, as you'll hear Eric share. Really, really exciting space. They're doing some really innovative stuff. Eric presented the new Money SDK for iOS and Android at this year's SoFi event. Just by way of disclosure, Eric and the AppBrilliance team have also sponsored the SoFi event the past couple of years, but no money has changed hands for this show. And frankly, that's not the way this show is going to go, by the way. We don't do a pay to play in order to be a guest on this podcast or frankly, any other podcast. Maybe at some point in time, we'll roll out sponsorship opportunities, but we're not there yet. Right now, the whole goal is to shine a light on really exciting startups, really exciting concepts, interesting folks, and I hope you get a lot out of it. Okay? So without any further kind of rambling from yours truly, let's get to it with Eric Smith of AppBrilliance. Ready? Let's do it. Well, hey, Eric. Great to have you on the show today. It feels like it's been a million years since we've seen each other, but looking at the calendar, it's only been about 2.5 months or so. So great to have you. How you doing?
My pleasure. I'm glad to be here, and I'm not sick, and my family's healthy, and we're getting through this time.
Well, that's really wonderful to hear. It is one of those times where you just feel grateful to be anywhere, frankly, right? As long as your family's healthy and you're healthy, the rest is kind of gravy. So I thought a great way to start things off would be to kind of lay the groundwork for what AppBrilliance is doing with the new Money SDK for iOS and Android. Because when I first heard about it, when you shared it with me on the phone before our SoFi event, I was incredibly excited about it because this is a problem that needs solving, right? I've personally experienced it firsthand, and I've wanted to see it solved because I felt the pain of the old way of payment processing and the fees that are involved with it. So why don't you tell us a little bit about what the SDK offers companies and users that is new and innovative and really, frankly, needed at this time?
Yeah, so we're solving a $120 billion problem. So in the US, there's roughly $120 billion of cost that is borne by merchants and retailers and ultimately passed on to consumers in the form of card processing transactions. So when you buy a $100 widget from Amazon, the retailer, Amazon, only makes $97 out of that 100. The other $3 goes to Visa and MasterCard and all of the ecosystem that's out there that supports those card transactions, whether it's debit or credit. And that is one of the biggest unsolved problems in fintech. So over the last 10 plus years, those costs have drifted upwards, not down. And so what we've done with our Money SDK for iOS and Android is we've given trusted developers a way to allow their customers to pay them that is all the benefits of a card transaction in the sense that it's instantaneous money at radically reduced cost. And we do that by directly moving the money from the consumer's the customer's bank account directly to the merchant's bank account and not having to go through the card networks at all. And that is fundamentally new technology that we think is going to be really, really disruptive to that $120 billion card processing industry, be it Visa or MasterCard or the ecosystem of companies that have built up businesses around processing those card transactions. We're trying to offer a fresh new approach that can ultimately reduce cost to those retailers or to those merchants that implement our SDK and create an ecosystem that ultimately benefits the consumer, either through reduced cost to the consumer, more competition, things like that, by reducing that roughly 3% tax that is on basically all goods and services that are sold, and reduce that down to something around 1% from 3%.
It's that concept of reducing that 3% fee that first got me crazy excited about the Money SDK when you first told me about it, because I have long railed against the absurdity of companies charging 3% to move ones and zeros from one account to another, right? I mean, it's not like Visa or MasterCard are showing up at my house with an armored car, picking up cash and driving it over to Amazon, right? It's literally just moving some code, ones and zeros, from the buyer to the seller's account. And, if you're the buyer, I guess this should bother you a little bit, because when you're purchasing something, it's effectively driving up the cost of what you're buying. But if you're the seller, it really adds up. It hurts your profitability. I guess if it's a small transaction, it might not seem like much, right? You buy something for $100, okay, it was $3 for the fee, and okay, no big deal. But when you start getting into the thousands, man, oh man, does it really add up, and it can put a pinch on the profitability of your business. So why don't we dive in a little deeper? What are you doing? Can you give us a bit of a preview of how is it possible that you're able to chop that 3% way down and make it more efficient for the transaction? What is this technology and how does it work?
Yeah, sure. So what we've done with the Money SDK that no one has ever been able to do before is we've effectively reverse engineered the access control layer to the consumer's bank account. So we provide a technology that runs on the user's device in association with a trusted application that they opt into and install. And that technology basically directly connects to that customer's bank account and with their credentials directly into their account, and controls that account's ability to push funds to external accounts. Now, those are features that have been turned on by most of the largest banks in the United States, but they're not exposed in a way that retailers or merchants can take advantage of. They're put out there where the customer can log into their Bank of America portal or app or Chase portal or app and can, create a payee, or they can move money directly out of that account. That's not designed as, that as implemented, that's not a replacement for a credit card. But what our SDK does is repackage those capabilities in a way that basically turns it into a money teleporter, right? And so it allows the technology company to package those services in just a way so that they have the ability to recreate the benefits of the credit card networks in the sense of quote unquote instantaneous good funds or known good funds with a completely different set of backend infrastructure. So we're leveraging the features and capabilities that banks expose to their consumers today, and we're creating a new ecosystem or a new rail, as they say, around that bypasses these legacy systems that have grown up over the last 30 plus years, which is the card processing ecosystems that exist because there was no other means for directly interfacing with the banks on both ends of the transaction. So now we come along with new patented technology that can directly interface with all of the banks on both ends of the transaction that replaces the need for that intermediary infrastructure, which is the card processing ecosystem.
What I found particularly attractive about this when I saw the demo of the solution that you did for everyone at SoFi was that the transaction is in the user's control, right? It's on my device. So if I have my iPhone with me and I want to buy a good or a service from a provider and I'm using the Money SDK, I'm going to be able to sit there and click it, provision the banking transaction, and send money from my account to the seller's account, but I'm never going to provide them with my account information, right? It all lives on my device. And I think that's really important because, when you're buying something, you're not always comfortable handing over your credit card information, especially in a world where it doesn't seem like a week goes by without us hearing about a retailer that's been hacked and exposing all the credit card numbers that are on file and so forth. So I love the notion that everything is right there in my phone and I have a level of control over it. Now, before we jump into the next topic, you mentioned a term called good funds, and I thought it'd be kind of fun to dig into that and unpack it a little bit because I'm not sure if everyone's familiar with it. One of my early jobs in the financial services space, in fact, it was my first job way back. I used to work for this company called Boston Financial Data Services, more commonly known as BFDS. And one of my jobs was opening accounts for customers, right? They would send in their application to invest in a mutual fund. You'd open it up and you'd have to check what kind of funds did they send in. If they sent a personal check, that's one thing. But if they sent good funds in the form of a cashier's check or a money order, that money was active and live on day one. It's good funds. The bank says this is as good as cash. You don't have to wait. We're backing this money. So how does that translate to what the Money SDK is doing? What's the good funds concept mean in that perspective? Because I think it's really important for those who are looking to adopt it.
Yeah, so the good funds concept is based on the idea of, do I have money in my account to offset the goods or services that are going out the door or not? Is there risk in that I'm going to be out both the money and the item that I'm selling? So can someone dispute the transaction? Will the check clear? Will the card transaction bounce? All those kind of things basically are wrapped up in that concept of good funds. So in an ideal world, if I want to buy something from you, it's a transaction, right? It's consideration. So the trick that card companies have pulled that have enabled the evolution of e-commerce and frictionless retail, which is what we have today, is very, very low friction transactions. You can get in and out of a retailer in just seconds now. And they've done that by disconnecting that delivery of consideration for the item. Or the service. And so there's an entire industry, which is the payment card industry, that basically says to the retailers that sign up or the restaurants or whoever's using the card processing systems, they've said, look, there's a trade-off here. You can have very low friction so consumers can come in and buy your goods or services and they can get out of there quickly. You can turn that table or you can clear that next queue in the line so you don't have to hire as many cashiers, et cetera. You can do that very, very quickly. But the trade-off is we're going to charge you 3% and you're going to actually get the funds in, say, 3 or 4 days. And so there's a float there. And so what the retailer is actually getting at that point of purchase is they are getting the card processor that says, okay, irrespective of everything else, we're going to pay you. Right. So you are going to get the funds minus the processing in 72 hours or 48 hours, however long it is. You can go ahead and let that good and service go out the door. Now, there's a lot of things that happen in the middle between the time they give the merchant the authorization code that lets them know to go ahead and close the ticket, let the person leave, and ultimately the settlement of that, where those funds are technically good and they're in the control of the retailer. And again, that period of time takes a few days. And during that period of time, there's a lot of things that are happening, but the main delay is the legacy nature of the U.S. financial system, is that the fact that the interbank system for moving money is slow. It ticks over once a day. It's not real time. And these are Fed intermediated interbank transfers. And so the card companies mask that for the retailers. They buffer that for the retailers. And they make it so that the funds ultimately leave the consumer's account and reach the retailer through the traditional banking system, which is slow and ticks over on a 24-hour basis. But they're layering on top of that information, real-time information, that's disassociated from the real-time delivery of funds. So they've created a hybrid system where they give real-time information to the retailer, so the retailer can know that they're going to receive funds, that they will be good funds in 72 hours or whatever it is. So the information is real-time, but the delivery of the funds is disassociated from that and ticks over on, like I said, it takes a few days to go through the banking system. Now, that's the first layer of disconnection. Now, so the entire ecosystem of card processing companies out there, that $120 billion in cost for the US system, is based on that delivery of real-time authorization information for the retailer. So they feel like their risk can be reduced to go ahead and allow the delivery of the good or service or make the shipment, et cetera. And ultimately they will get paid. The holy grail is, and what we deliver, what our Money SDK delivers, is the collapsing of that spread between real-time information and actual delivery of the funds. So we make it so those two things happen simultaneously. And we do that by bypassing the card networks and the fact that, ultimately they're relying on the legacy systems for moving funds between banks, and the fact that all of these banks are independent entities. We get around all of that. We create a new system where we're directly connecting the bank endpoints. So the consumer connects their account, directs their bank to send the funds directly to the retailer, and all of that happens through the direction of our Money SDK in real time. So the information that the retailer gets that says, hey, that they can go ahead and close this transaction and ship the good or let the user walk out with a receipt, they get that in less than 10 seconds, which is very similar to a card authorization request. But they also get actual receipt of funds in their account in that same period of time. And that reduces the risk. It makes it so that all transactions are good fund transactions. And because the transactions are happening on a rail that is not subject to all of the agreements that retailers have to, they're called network agreements, right? Visa network agreements or MasterCard network agreements or card processing agreements. Those agreements have tremendous numbers of rules that are based on financial regulations that are in place to both protect consumers and retailers. Those rules make it very complicated for the retailer in chargeback scenarios and things like that.
You know what I really like about this that wasn't immediately apparent to me when you first demoed it? I mean, I was aware of it, but I didn't think about it too hard, is this is a transaction from one bank account to another bank account. So from the buyer directly to the seller's bank account. Whereas many other instant payment options that people use via mobile, like Venmo and PayPal, are from one Venmo account to another Venmo account, or from PayPal to PayPal. And while that works and it's efficient and people use it, there is a negative because those services are walled gardens, right? So if I send you money via Venmo, it goes from my Venmo account to yours. It's still kind of stuck in Venmo, right? I've got to do another piece of action in order to move that to my bank account, and that could take some time, or I may have to pay a fee for it if I want it to be instant. But I still have to take the step to do that. Whereas with the Money SDK, the money goes instantly from my bank account to the seller's bank account, and that seller can now use that money for all the things that they use their money in their bank account for, right? To pay employees, to buy supplies, to pay their rent. They don't have to think about moving money. It just instantly comes right into the bank account and it's immediately available for their business. It's really innovative.
Well, thank you. There's a reason that the Money SDK exists and didn't exist 5 years ago. It's the fact that everyone is walking around with supercomputers in their pockets. And in a post-COVID world, we are more and more likely to use apps as the interface, the point of sale interface for the thing we're buying. So 6 months ago, it was apps for e-commerce, right? The Amazon app and the Target app or whatever, the Walmart app, where you could shop online on your phone, purchase, clear the transaction with your safe payment credentials, and then the thing shows up in 24 hours or whatever your doorstep. It was beautiful. But then there was that disconnect between the e-commerce world and the physical real world. You'd go out and you want to pay your bar tab, or you want to go to the grocery store or whatever, and that was still a card-based transaction, or maybe Apple Pay or Google Pay, right? Now, in a post-COVID reality, that is merged. And so you still have the app-based interfaces for things like DoorDash or Uber or Amazon, which are quote unquote walled garden within the ecosystem for their own consumer communities. But you also have the fact that these brick and mortar retailers and restaurants, et cetera, are using app interfaces for their customers. So the customers will pull up the Chick-fil-A app, for example. They'll decide what they want before they even walk into Chick-fil-A. They'll pay in their app. There was no point of sale interaction whatsoever. They didn't have to put cards in card machines or tap their phone on a Square terminal, for example. They didn't have to do any of that. Everything's ready to go. They just show up and they pick up their order. And so the whole world is shifting very, very rapidly to the smartphone being a personal interface for commerce, no matter where you're going. And so that creates a new integration technology. This is why the Money SDK can exist now and couldn't have existed 5 years ago. Because our SDK has to be embedded inside of a mobile platform or a mobile app that the user already uses and trusts. It's not a general replacement for the credit card in your wallet that you could literally use anywhere. This is a targeted approach that works for customers and ecosystems where users have already adopted the app, already have saved payment credentials inside the app. If you've gone that far, right, and you have those sort of experiences for your customers and they've already opted into that, and those transactions are a very large percentage of the 120 billion US payment card ecosystem. So if you've already gone that far, going that extra small step and basically offering and incentivizing customers to replace the default card, right, that would go to their debit or credit card, replace that with a direct link to their bank account or their financial account through the Money SDK. Once that's done, everything else is already in place, right? So they already have the on-device checkout. They already have that entire ecosystem that was already in place in the application. So it makes it very easy to adopt our system. If we were to have tried to roll this out 5 years ago, there wasn't already an established ecosystem of apps and customers that have already adopted those apps that could easily plug our SDK into. That wasn't existing 5 years ago. And so now we're in a world where that has become much more pressing and prevalent and an established way that customers are buying stuff. And so it makes it much easier to adopt the SDK as an alternative rail for credit card payments than it would have been.
You just hit on something that I think is so important for everyone to appreciate, particularly the entrepreneurs who may be listening to this show and people who may be looking to adopt the Money SDK in their business and in the app for their business. Timing is everything, and it really, really matters. The timing is right now, but it wouldn't have been a few years ago, as you mentioned. I mean, the smartphone, as we know it, is only 13 years old. It came out in 2007. That's when the first iPhone dropped. And back then, people weren't comfortable using their phones for payments. And even if they were, the infrastructure just didn't exist. NFC chips didn't exist just yet. And there was no apps on the original iPhone. So there was no way for a vendor, a merchant, to put an app on a phone and give you that kind of control in which you would have felt comfortable executing a payment. But fast forward to 2020, and more of us are using our phones all the time to buy stuff, whether we're doing it from sitting in the comfort of our own home or we're doing it when we walk into the merchant's place of business. So I know me, as an example, I'm 48 years old. I'm really comfortable using my phone to pay, and the younger generations are absolutely more comfortable than I am. But listen, I'm more likely to leave the house without my wallet than I am to leave without my phone. I can't remember the last time I found myself anywhere wondering, where did I leave my phone? Because it's always on me, but all the time I'm leaving the house and I forget my wallet at home. So it's a really, really important thing about timing, right? And the timing is right now. The infrastructure exists, the phone's functionality is right there, and people's comfort level with using that phone for payments is at an all-time high and continuing to grow. So you mentioned that 5 years ago timeframe a couple of times. And I noticed that AppBrilliance was founded in 2015, 5 years ago. So was the SDK on your mind when you founded AppBrilliance, or is it something that evolved over time, or was this a pivot, or did you have some sort of brilliant moment where you're like, oh yes, this is the aha I've been waiting for sometime along the way? Talk a little bit about that. Like, what's the history of AppBrilliance and how did the SDK come about in terms of you and the team deciding that this thing needs to exist in the world?
Yeah, so I wish I could say that we were smart enough to recognize that this opportunity ultimately was what we needed to develop 5 years ago. That's not the case. What is fortunately the case is that what we started working on 5 years ago, based on sort of an epiphany that I had about a different way of doing something called data aggregation, which we'll get to in a second. But the 5 years ago, we started to lay the groundwork for what ultimately we're commercializing now as the Money SDK. But we didn't have the vision that ultimately what we could do is disrupt Visa, right? That wasn't the initial vision. The initial vision was just coming up with a way to make it easier for technology companies to build products that better integrated with banks. And there's an entire universe of fintech companies that provide those services today. They're basically known as financial data aggregators. We call them, cloud-based data aggregators. We do. That's how we refer to them to differentiate them from our technology. Companies like Plaid or Yodlee or MX or Finicity. And these companies are basically data brokers. And what they figured out how to do, and basically trying to fill a big gap in the market, is they recognize that getting banks to talk to one another or to talk to tech companies is basically impossible. There's no open web services API that Google or Square or whoever can just tap into to be able to have access on an opt-in basis to customers' bank accounts. And so in this vacuum of customers needing to be able to link their accounts into these fintech services, these companies have come into this space and they broker in user data. And basically they, if you log into your fintech application, pick your bank, enter your credentials for your bank into the financial data aggregator, that data aggregator keeps those credentials in the cloud, connects to the bank, scrapes data from the bank, and that data is then passed along to the fintech company and creates integration that basically solves and bridges some of these integration gaps that exist because banks don't have these open integrations. So those approaches existed 5 years ago. Those approaches existed 10 years ago. But those approaches are fundamentally different than our approach. And we took a different path to solving that opportunity in the market space, right? We took a different path to solving that opened the door to all the things we're doing in the Money SDK. So the fundamental innovation we had, the realization we had was, unlike financial data aggregators that take user credentials and access user banks and accounts from centralized servers in the cloud, unlike that approach, we could take approach where those connections to the banks happened directly from users' smartphones, where credentials were never shared with a third party. And as a result of that, the connections that are happening from the device to the bank, from the bank's perspective, they are users connecting to their own accounts to manage their own money. So that's what we have a patent on. That's a fundamental innovation. And that is the innovation that ultimately led to what we're doing with the Money SDK. Because if you're connecting to the bank from a whitelisted device that is always used to manage your money, then the bank is going to allow that device and you to do quote unquote higher risk transactions, such as money movement to third party accounts if they make those services available to you through their app or their website. Whereas they would never allow, or they've never created an ecosystem or an interface to allow tech companies to do that directly. So that was the fundamental innovation we had, was we're going to change how, we're going to change the architecture and how these connections happen for accessing bank data in a trusted way. And it just so happens that that architectural innovation that we did opened the door for all of these new use cases that we are commercializing now as the Money SDK. Because we can connect directly from the user's device to the bank in a trusted manner, that gives us access to services that the bank provides that customer for money movement that are firewalled off from third parties that are not that user. So financial data aggregators like Plaid or Yodlee or Finicity or MX, they don't have right-based access to the user's account because the banks can tell that those connections are coming from a third party. Since our connections are coming from a first party, they're coming from your device to your account, that gives you, the user of the SDK, privileged access to your own funds and the ability to do things with those connections that third parties are never able to do. And getting back to your question, I would like to say that we had 5 years ago the presence of mind to say, if we invent this and we build this as spec'd, then ultimately what it's going to allow us to do is attempt to disrupt this $120 billion payment card market. That wasn't the case. What we were trying to do is simply build a better mousetrap that was a better, more secure, more reliable way of doing financial data aggregation. And in the process of doing that, it turns out what we invented and what we've developed is actually far more valuable than just building yet another financial data aggregation tool. Because, the fact that it allows you to control your own accounts and not just extract information from those accounts that you can provide to a third party, that's a game changer.
Oh, I agree. One of the things you just highlighted that is a perfect segue into where I'd love to go next is you've highlighted that entrepreneurial mindset, right? You started out with trying to solve one problem. You got into it, you worked really hard at it, you found you were making really good progress on it, but that discovery led to other discoveries. It's kind of like if you were digging for gold and you discovered diamonds, right? You didn't decide, well, hey, listen, we're not going to pick up those diamonds because we're digging for gold here. Let's go for the diamonds. Have you always been entrepreneurial in your approach to life? Like, were you that kid who had the lemonade stand and a newspaper route and were learning to hack on your computer and build apps for businesses when you were 12 years old? Or has this been something you've evolved over time? Tell me a little bit about your entrepreneurial journey, because you have a lot of the classic entrepreneurial traits and the way that you think and approach the world from what I can see. How'd you get there? What was that path like for you?
Oh, wow. So I dropped out of Texas A&M my senior year to start my first startup. And yeah, so I've been doing this. I'm 40, I'll be 47 this year. So I've been doing this since I was 21. I'm bad at math. So however many years that is. And so I'm not sure where that came from, other than it came from a place where, growing up, it was accepted that risk and reward were related, right? So my father was an entrepreneur. He ran multiple businesses, and he originally was a professional athlete, and then when that did, once his career ended there, he had to do something else, and so he went into publishing. He did newsletters and edited books for different folks, and he had some investment services, and he created new products and new services, and that's what he did for a living. And so I grew up respecting that, and I grew up understanding that a job was not something that you had to apply for. A job was something that you could create for yourself.
Ooh, I like that. I can absolutely relate.
And so that was always my idea. And when I originally went to college, this is something that we talked about as a family. It wasn't going to college so you can get the skills to get a job, or going to college so that you had a piece of paper that would allow you to get a job. It was going to college to figure out what you wanted to do with your life. And if you can figure that out without college, or you could figure that out along the way, then that's great. Just do it. And so when I woke up one day, my senior year of college, I guess this was 94, late 93, and the internet was just blowing up, right? Internet Explorer had not come out yet. Netscape Navigator was out there. Netscape as a company was just starting to sort of create this quote unquote open internet, and ISPs were becoming a thing, and it wasn't just all CompuServe and AOL. And I said, look, there's a there, and I don't know what it is, but I know I want to do something in that space. I know that my time in college is done. So yeah, that's sort of the ecosystem that I grew up in, is having that respected and having that be something that I was never under pressure to be a doctor or a lawyer or a scientist or something like that. It was always go to school, do something you're passionate about that you like, and figure out what that is, and then figure out how to create the job you want, right? And that's sort of the genesis of where I got permission, or I gave myself permission to do this at a young age.
I love that story. It's really interesting, and it's fascinating too. As a dad myself, I always wonder, how am I influencing my kids? And I think we all do as parents. They're watching. They are, as you mentioned. They're actually seeing your behavior. And as you mentioned, that risk tolerance, they're seeing your willingness to go out and tinker and try new things and explore the world, and understanding some of that might result in failure, but you can pick yourself up and continue on. So I love that approach that you and your family had. And of course, obviously, it's translated into who you've developed into now, and the things you're building now and bringing to the world. As we get close to wrapping it up, one of the things I want to make sure I cover on this show with every guest is something I've become sort of famous for with the SoFine event and the SoFine community. And that is, I want everybody to have an ask of the audience, right? I do that at the SoFine event. Everybody who gets up on stage should have an ask of the audience. And I encourage everybody in the audience who's attending SoFine to have an ask of each other, right? Something they want. So if you could ask the audience, anyone who's listening, for something, what would you ask of them?
So if you're listening to this and here are the prerequisites for being able to use the Money SDK. Maybe that's a different way of approaching this. So to use the Money SDK, you need to be able to integrate it into an Android or iOS application. So if you're a developer or a company out there that already has invested a lot of money into your mobile application, you've enabled the mobile app to allow customers to pay for your goods or services. If you've already done that, you have hundreds of thousands or millions of consumers using your platform. You owe it to yourself to connect with us, reach out to us at AppBrilliance, and evaluate whether the Money SDK can save you potentially millions or tens of millions of dollars a year on card processing. Because it really is that simple. You integrate the SDK, you provide it to the users as an incentivized alternative rail. They link their bank account very, very easily, one time. And then from that time going forward, it is the default way that they pay for your goods and services. And so if you meet those prerequisite conditions, if you've got that application, if you've got a lot of customers that have already installed this app and they're using it as a way of interfacing with your company and paying for goods and services, then you are an excellent candidate for using the Money SDK to save a tremendous amount of money. So that's the first audience. The second audience is companies that are already in the payment space. You mentioned companies like Venmo, right? Is now owned by PayPal, for example, or Square, or some of these other companies that are out there that are doing both peer-to-peer payments, or they're doing point of sale applications and things like that. Those type of companies have built very large scalable businesses despite the legacy architecture on which they're built on top of. And for those companies, this is a win-win. They can come and they can license our technology and then basically create new ecosystems where they can become the next Visa. We don't want to go out there and create an enormous network of endpoints that we control and we monetize, right? We're not out there building apps. We're not out there creating branded networks for electronic payments. But what we want to do is partner with and license our Money SDK to companies that can create that for themselves or are looking to get into that business and do that for long tail retail, right? The barbershop down the street, the restaurant down the street. So there's opportunities at both ends of the spectrum. So, directly embedding the SDK into an app, if they've already made those investments, that works, but that's obviously going to be concentrated for larger companies that have the marketing budgets and the technology budgets to build those experiences for their customers and get those into millions of users' hands. And on the other side, there's a handful of companies that aggregate tens of thousands or millions of those retail endpoints and currently have built their business on top of processing transactions over a Visa and MasterCard. And those type of companies also can integrate the Money SDK to create new ecosystems. So whether that's Google, Apple, Square, Fiserv, companies that are out there that have already put all of those pieces in place, but they are having their business model is based on these legacy systems like processing traditional card payments. Those companies can integrate with our technology and both make more money than they're currently making and reduce cost and improve the lives for the long tail retail folks that are dependent upon their platforms to process card payments. So ultimately, the vision that I would love to see come out of this post-COVID reality is those network companies to partner with AppBrilliance and what we're doing with the Money SDK to ultimately radically reduce cost for the restaurant down the street. Right? If we can reduce the card processing cost for the restaurant down the street from 3%, and frankly, it's depending on the ticket size, it can be larger because debit card transactions have a per transaction charge. So if your average ticket size is under $10, the percent of that $10 that you're having to give up for card processing is actually well north of 3% because of the minimum card cost. So for small retailers, there's an enormous opportunity for these networks to partner with AppBrilliance to create an alternative higher value rail than just running over the legacy ecosystem or the legacy rails for card processing, and ultimately reduce cost and improve margin for small businesses across the country. So our technology can be used in both ends, both for large companies and for long tail retailers.
That's awesome. This has been fantastic, Eric. I really do appreciate you coming on the show today and sharing the AppBrilliance Money SDK and, frankly, your journey as an entrepreneur as well, because I really do think it's important for the ecosystem to hear stories like this. And the Money SDK has the potential to have a huge impact on not just retail players, but B2B players as well. I mean, I think about my business, right? I'm using lots of services that I pay a monthly fee to via credit card and others that I buy a piece of software, whatever, as a one-time payment or an annual payment. And they're all getting hit with those fees. So a lot of the SaaS players out there that are relying on credit card processing could surely find a way to use the Money SDK, as well as your more traditional retailers, as we discussed, as well as some of those long tail players you mentioned. I'm sure many of the listeners are going to want to follow up and learn more about the Money SDK, more about AppBrilliance in general, or frankly, they might just want to connect with you and learn more about you or from you. So what's the best way for somebody to get in touch and follow up?
Anybody can email me anytime. Email me at Eric, ERIC, at AppBrilliance, AppBrilliance.com, and be happy to talk with you about what we can do to help you out.
Perfect. Thank you, sir. Talk to you soon.
Appreciate it.
All right, I hope you enjoyed that conversation with Eric Smith of AppBrilliance. I know I got a lot out of it. This is what you can expect more of from the So Fine podcast. The goal is to bring you really interesting entrepreneurs and business leaders from the fintech and financial services ecosystem, and we can all learn and get better and support each other. If you'd like to be on the show, or if you have a suggestion for somebody that I should have on the show, please do reach out to me, Mike at finservemarketing.com, or you can hit me up. I'm at Mike Langford pretty much everywhere on the internet, so real easy to find. Also, if you would like to explore having a podcast produced and distributed on the FinServe Marketing Podcast Network, reach out for that as well. Love to chat with you about that. We're going to be adding a lot of new podcasts to this network in the coming months with a goal of all of us growing a collective audience that we all benefit from. So love to hear from you and chat about that. Okay. Until next time, hope you stay safe and healthy and be nice to each other. Okay. We'll see you next time on the So Fine podcast. Have a good one. See ya. Bye.